So today's paper is going to be June 2020. We are doing our variant 2, which is our variant, okay? So let's look at first the data response. In this day, they talk about Argentina raises interest rates to 40%. So there is an increase in interest rates in Argentina. And then they talk about, they give you this graph where here you have pesos per dollar. You know, pesos is represented in terms of dollar. Pesos is the currency of Argentina, of course, and they are representing it, the exchange rate here, and this is time period. So as you can say, peso was 15, it was 15 pesos per dollar, and it's gone to 20 pesos per dollar. So if I could see this is from 15 pesos, it's gone to $1, it's gone to 20 pesos to $1. So if I ask you guys, is peso becoming stronger or weaker? Guys, is pesos becoming stronger or weaker? $1 was 15 pesos. Now $1 is 20 pesos. In other words, it's for every dollar you used to get 15 peso worth of good. Now for every dollar you get 20 peso worth of good, which means dollar is becoming stronger or peso is becoming weaker, right? So Neza is right. Peso is becoming, and other people are right, peso is becoming weaker. And also look at this, guys, they're saying this, the central bank sells $1.5 billion. When you sell reserves, what happens? When we sell reserves, you are basically getting pesos in the market, right? Because you're selling reserves. So there has to be something done because right now it seems like the peso is becoming weaker. Maybe the government might do something about. So let's look at what they do. So before we look at what is happening here and how does this graph explain what is happening, let's read the text. On May 4th, 2018, Argentina Central Bank raised interest rates to 40%. That's huge. Interest rates going up means you will see hot money to flow in and so on, and exchange rate can go up, right? So we know that kind of this is huge, right? The day before this increase, they were raised from 30% to 33%, which means they're continuously increasing the interest rates. A week earlier, they were raised from 27.25%. The rises, they were aimed at supporting Argentina's currencies, the peso, which lost a quarter of its value over the previous year. So they are saying this, the rise were aimed at supporting Argentina's currency, the peso, which lost a quarter of its value, which means they're making the exchange rate to go up so that the lost value is gained back. Do you guys get that? Does that make sense? Are there any questions about this so far? Despite these rises, pesos, which before the economic turmoil in Argentina in 2001, 2002 was fixed at a parity with the US dollar, was trading at about 22 pesos. So this was the value in 2001, 2002, which was fixed against dollar. Risk to the peso had been developing for some time. These included a large budget and current account deficit. So the country is running into a large budget and current account deficit, a heavy government debt burden, persistent high inflation, and overvalued currency. So number one, they're saying the currency is overvalued, okay? Number two, they're also saying inflation is very high. Number three, they're saying government owes money to others, and also you have a X minus M, which is in a deficit, and also budget deficit means T minus G is less than zero. Kind of like what is the situation in Pakistan? We have a large budget deficit. The government doesn't have money. We have a current account deficit. We have a heavy debt burden. We have not persistent high inflation, but we have a high inflation. And our currency, I don't know whether it's overvalued. That's something which probably doesn't work for Pakistan. Inflation, a long-standing problem in Argentina, was 25% in 2017, the highest annual rate in South America except for Venezuela. The central bank has set an annual inflation target of 15%, which is pretty high as well, guys. And as stated, it will continue to take measures to achieve it. So there is very high inflation happening in Argentina as well. Argentina's new president is pursuing a pro-market economic reform program seeking to reverse the protectionism. So they're lowering protectionism means they're lowering trade barriers. Let me write this. They are lowering trade barriers, right? And high government spending of previous government. So they're also reducing government spending, right? What else they are doing? The president has pledged to reduce government spending drastically, which would mean basically that can control inflation, guys. Isn't that true? Because G goes down, you can see the AD to go down and therefore the price level to go down. The political opposition wants to stop him from removing subsidies on a range of basic household products, including gas and electricity. Removing the subsidies may bring up more inflation in the short term, but could help in the long run in terms of high level of annual rate about 5% by 20. So he's saying that, like let's remove all these subsidies, which would mean in the short run there will be high inflation, but could help bring it down from its current high level, and then ultimately things will normalize. International and domestic investors still believe the president has a good plan for Argentina economic recovery, but they're not convinced he has enough political support to achieve it. So while the president is going for these drastic changes, does the government have any power or not? So yes, this is a compulsory question. So that's one thing which you have to do. You have no choice whatsoever. Okay, state what the upward trend shown in figure 1.1 means has happened to the value of peso. Guys, what has happened to the values of peso? Anyone? So exactly, guys. So the first point that you guys look at, it's a 1 mark question. So we can say the peso has become weaker or peso has depreciated, or become weaker, or you can say has gone down in value, right? All of these terms you can say. So you get 1 mark for this. Gir gaya hai value. Yes, you can also say it that Central Bank of Argentina sold the US dollar from its. I'm looking at B part now. The Central Bank of the US of Argentina sold US dollar from its foreign exchange reserves to a value of 1.5 billion in 1 day. That's a lot of selling of foreign reserve. When you sell foreign reserves, what happened as a result of this, guys? We can see when you look at demand and supply of the currency, what will happen, guys? Anyone? Demand of peso will increase. See, when you're selling in our model, so there are two things. If you look at it from one perspective, when you sell foreign reserves, you are actually buying your currency, right? So one could argue demand for peso to go up, but in our notes, what we've done is that when you sell foreign currency, with our diagram, the way we make our diagram, we are saying supply will fall, because we are always looking at who's selling it. A local, like a government, is selling it. So if this is my demand and supply of, so this is peso per dollar, right? This is quantity of pesos. We believe the supply curve will shift backward, causing exchange rate to go up. Now, you can also say this, guys. Okay, you can also say this, that in this case, you can also say this, that if this is demand and supply of pesos, the demand for pesos goes up because somebody is buying pesos, okay, or demanding pesos by giving. The result is the same. The exchange rate will go up. The result will be the same. So that's something which will not change, because we're trying to increase the you guys are doing something. So guys, you can't think of dollar right now, right? You can't think of dollar. You need to think from a peso perspective. So your currency is peso per dollar, number one. या तो आप ये कह सकते हैं, either you can say this कि supply has gone down because you're selling your reserves. When you sell your reserves, you obtain pesos, so the pesos in the market are going down, supply decreases. Do you guys get that? Number one is this is a way to look at it. Number two, so exchange rate will go up, right? So with the help of a supply diagram, explain the what effect would you expect this intervention to have on the value? The value of the currency will go up. Or you can say this, that if I demand pesos, I need to supply other countries' currency. So my demand, the result is the same. You can either show this or that. You all get that? Got it? So labeling is is very important here because you need to say peso per dollar and you have to say quantity of pesos. Are we good? Any questions about this, guys? So 3 marks for this and 1 mark for this so far. Are we good to move on? Okay. In the extract, it is stated that risks to the peso have been developing for some time and that large budget and current account deficit are some of those risks. Distinguish between a budget deficit and a current account deficit. What's a budget deficit? Budget deficit is when the government owes money, and this is basically a deficit that happens when T minus G is less than 0. Okay, government taxes minus government spending is what we call a budget deficit. Right? If the taxes are lower than the government spending, then the government will need to have borrowing to fund this money. On the other hand, current account deficit, guys, is a deficit that happened because your X minus M is less than 0. So this happens if the government is basically running into what we call a trade deficit or current account deficit. And you can talk about here that a budget deficit means that the government is exceeding its expenditure more than the revenue, while a current account deficit means your X minus M is less than 0. And you can talk about current account includes other items as well as goods and services. So remember, it has goods and services, it has services, it has income, and it has also current transfers. And if the balance is negative, we will run into a current account deficit. Okay. Now let's look at second part. Please stop me if you have any questions, guys. If you have any questions, please let me know. Explain one way in which a persistent high inflation represents a risk to the peso. If you now this is something which we've done earlier as well. That if now this is for 2 marks, guys. So understand 2 marks would mean we need to talk about one way. Okay, so we know this: if the exchange rate, if inflation goes up, exports become expensive, imports become cheaper. And if that happens, and we said this, that your inflation goes up, exports become expensive, imports become relatively cheaper, right? But what does that do to your exchange rate? Anyone? X minus M will go down, and therefore exchange rate will go down. Isn't that true? So a higher price level means internal value of money goes down, but also external value of money goes down. You can also talk about so lower exchange rate or weaker exchange rate. Any questions? Saman, Uneza, everyone else, are we good to move on? Okay. Let's look at this one. Using ADAS analysis to explain how the recent interest rate rises might help Argentina to reduce its annual rate of inflation and its target. So using ADAS analysis, we need to show how recent interest rate rises when the interest rate goes up might help Argentina to reduce its price level, okay, inflation, and achieve its target. So how does a rise in interest rate, guys, can cause basically price level to go down? We know this, that when the interest rates go up, right, your consumption will fall, your investment will fall, right? Because the cost of borrowing is going up and incentive to save is also going up, which would mean AD will fall. And if the AD goes down, right? So labeling it properly, price level and real GDP. So AD curve will shift backward, causing price level to go down in the economy, right? Also, if interest rates go up, hot money flows in, right? Which makes exchange rate to go up, causing your price of exports to go up, price of imports to go down, and therefore X minus M to go down, which will also mean AD will fall. So when the interest rates are going up, not only C goes up, so C go down, I go down, but X minus M go down, and that's why our AD falls. Got it? So you can talk about how this happens, because when the interest rates are going up, this will result in this to happen. Now, there's another explanation, guys. When the interest rates are going up, and it can also, any questions before we move on, guys? Okay, because guys, another concept here you can talk about is that if the interest rate goes up and imports become cheaper, and if key inputs are imported, right? So what will that do? If key inputs are imported, we can also draw this diagram, and we can say this, and this could be a separate diagram just to show even aggregate supply curve will shift to the right, because now the key inputs are imported. If key inputs are imported, then aggregate supply will rise because the cost of production will fall, like oil becomes cheaper in the market. Got it? Please make sure, guys, you write price level and real GDP and not price and quantity. Okay, so this is good because this was a 6-mark question. So I'm writing my analysis for both these things, and I can get my 6 marks for mentioning 1, 2, and then 3 part in this analysis. You guys see how interconnected everything is. It's a very good macro data response because it's testing our knowledge about concepts. Technically, we should treat a 6-mark like an 8-mark. Well, I would agree with you, unless Hamna, the word that is discuss. As soon as you see discuss now, you are now looking at evaluation. This was explain, which was a 6-mark explain, but this is a 6-mark discuss. So this is where your evaluation will come into play, and this is just like analysis. Okay, makes sense, Hamna? Does that answer your question? So Hamna is asking me that should we treat it like this one, like an 8-mark question, and the answer is yes and no, because this is also 6 marks, but this is a discuss question, so I will write an evaluation here. Typically, last part of my data response is always a discuss part. Got it? Does that make sense? Any questions? Guys, you can see how much of our theory is that we've learned in class is used in this data response. The whole chapter of inflation and exchange rate is very well tested here. So that's how strong your concepts need to be when you're looking at this kind of a question. Okay, let's look at our last part now. Discuss whether the potential advantages outweigh the disadvantages to Argentina economy if the president is successful in reversing protectionism. So, in other words, he's asking us advantages of removing protection versus, so let's write this, advantages versus disadvantages of removing protection. So what are the advantages of removing protection, guys? First advantage of removing protection basically means you're looking at advantages of free trade, so more choice available for consumers, more competition. We can say, we can also say economies of scale because you have a larger market. So more choice, more competition leading to, you can add lower price here and you can add variety here. You can also talk about comparative advantage as another advantage to the idea that we specialize in the goods that we have a competitive advantage. And as a result of that, there will be higher efficiency. Make sense? On the other hand, disadvantages of removing protection or reversing protectionism, basically disadvantages of free trade would be, they could be, like infant industries will not get a chance to develop. There's also a disadvantage in terms of sunset industries unable to be developed. Therefore, you could have a loss of jobs. If somebody is doing an illegal practice of dumping, they will not be able to, we will not be able to stop them because now the protectionism is removed. And lastly, one could argue this, that another disadvantage could be the X minus M may go down, the current account may run into a deficit because of this. So this is a great data response, I feel, because it again tests our knowledge about various things. And you have a lot to write also, So this is one thing that I wanted to show you guys. Any questions, guys? Anyone? Any questions, guys? Domestic industries won't have an incentive to improve quality of price because of less competition. Is that another point that you want to, how to value? This is valuation, Sanoba. So, the evaluation here, Sanoba, is the pros and cons. So when you're writing this is an evaluation which is pros and cons. Make sense? Okay, great. So we are done with the first year response. And what are your views about this? Now, guys, let's do one thing. For tomorrow, what I'm going to do, I'm going to have another class tomorrow. I'll let you know the time. And then what we'll do is basically, I want to do quickly another data response. And then we'll also can look at some of the essay questions. Let's look at some of the essay questions from policies, okay? Till then, I would like to say goodbye to all of you guys.